out debt, don't need to fully comply with the creditworthiness assessment based on the guidelines, who don't need to go through all the details of valuation of collateral, and especially don't need to deal too much with ESG, which we discussed just before, which will be a very important thing for the banks, and where the banks will also spend quite a lot of resources in the next years. Let's say the key impacted areas on this part of the regulation: ESG, as I said, technology-enabled innovations, which is something the banks are, of course, also doing, AML, and also, let's say, risk-based pricing, which is especially for us something which is not really common yet in the market, but it will widespread in the future. The timeline, as I said, it's somehow passed already in terms of when we should be ready with that. We had already first regulatory inspections, so the regulators already coming and looking if everything is done. And there is some, let's say, lead time still to where there are gaps, to address the gaps, prepare everything, and be compliant at least in 2024. And again, be ready to be, let's say, fully compliant with them, where the alternative providers don't really need to be in that detail. So to sum it all up, there is one topic which is closing the gap between alternative providers, and I hope the Consumer Credit Act will come in soon, so we will have a little bit more competition again on the market. But there are, of course, other things which are widening the gap again, and I hope that also this will somehow close in the future, so we will be very much in line both together, so the competition will also be as it should be, and not that the banks are fully out of the market because of regulation only. I'll stop here, and I'll take any additional questions.
Can you please, it's open? Yeah. Can you please tell us how do you see the evolution of consumer loans in Slovenia in the following months?
Let me go first back. So in the last 2-3 years, where the mortgage loans have been rather cheap, let's call it like this, and the credits were available, the consumer loans went a little bit down in terms of volumes, also imposed by macroprudential measures. Now, when we have the shift in interest rates, the consumer loans